Hello, hello, traders. It is marvelous and beautiful and sunshiny December 9th. One day until boot camp. Can't wait for our boot camp. Showtime. Reminder, trading room will be closed. We're going into lockdown with my students. Here's an example what happened on oil and what I will be teaching in a boot camp. I'm jealous, Zoran. I want to go to Paris. That's amazing. Amazing, amazing. Send me an email. We'll take care of that. Don't worry. Here's a reminder what happens when price comes to reversal zone. On oil, hourly. Price came to reversal zone and gave you only a correction. Correction, no powerful reversals yet. That's what separates knowledgeable trader from trader who does not separate what correction means versus reversal. Correction at reversal 1 and then powerful reversal. But oh my God, where did it end? If you remember, 64 level we've been discussing in detail yesterday is crucial and never ever ever to be ignored. Seller stepped in and right now it's way too late to short. Selling pressure played out since few hours ago, giving you a lovely shorting opportunity. Right now it's way too late to short, monitoring for buying pressure on oil hourly for day trading purposes, as hourly chart will always and forever remain our guiding light for day trading purposes. What's really exciting is to remind you what is happening on S&P daily. Remember where my lovely trade had ended 4 points later at 2075. Remember what I said. S&P respects decision point 2 like no other instrument I had ever seen. Right now it's way too late to short S&P. If you know Alpha Wave Trader method, you had a marvelous opportunity to short after the close of the trading room. Again, once again, time and time again. Decision point 2 on S&P, never ever ever to be ignored. That's where our lovely bullish trade had ended, and that's where serious selling pressure picked up the steam after the close of the trading room. Do not ever ever ignore this level. Make sense? And speaking of the devil, decision point 2 on daily, where collapse stepped in, where our marvelous long trade had ended. This was your last opportunity to buy on S&P monthly. Once again, decision point 2 on S&P never ceased to amaze me. And this is the reason why our bias currently on S&P is bullish, as this is where bearish trend is currently. Bearish trend at the end of the minor trend. Decision point 1, 2039.75 is very crucial support level. But it's only the end of the minor trend. It's not the end of the major trend. If S&P breaking through this level, as long as you respect and adore it, as this is crucial support level, S&P will head further down. We know better not to short anywhere near this level. We're already seeing pretty impressive bullish pressure played out a couple of times, with price pushing up by 2 points. Will buyers pick up this steam with vengeance, or will price continue to hear? That remains to be seen. Nevertheless, currently extreme caution on S&P, as this is very important end of minor trend. We're not shorting into this level at all. We're simply monitoring for a pullback. Until powerful pullback will play out, there are no shorts on S&P here for us. And while I'm monitoring S&P very carefully, and my beautiful amazing students remember what barometer and knowledge is telling you. Pay attention to what's playing out while I'm doing Fibonacci wave reviews. I also would like to highlight to you what continue happening on oil, as oil spelled out all of these levels since 5 years ago. That's a short on oil from 105, currently at 67. Guess where oil is heading next to? Drastically lower down, all the way to 44. Formula remains the same. It doesn't matter what you trade. Doesn't matter what you trade. I'm extremely excited about oil news tomorrow, as oil reminded you the power of reversal zone, but never was able to break outside of reversal zone 1. Oil will be at 60. Keep my fingers crossed tomorrow. If we don't have enough supply, oil is heading up. But again, you are witnessing very clearly, very clearly what the monthly chart is showing you. All the buying pressure is very temporary, as I spelled out to you, forever and ever and ever and ever. If you can visit my blog and if you can visit my social media, shorts are still in a play. Any support is extremely temporary. Good for us Americans, as first time ever America is the leading supplier of oil. So let's enjoy this ride. Let's monitor this powerful bearish collapse that started since overnight session, since yesterday, reversal zone. Do not ever forget the power of reversal zone. Just again reminding you where the short stepped in from on hourly chart. Combination of reversal zone and knowing where to buy and what not to short into remains the key. On that note, bearish trend is overextended. Just a reminder, until powerful bullish pullback will play out, we're not shorting oil and we're not shorting S&P. And S&P monthly reminding you, know what not to enter into. As the last buying opportunity on S&P, as a position trader was 18.12 and a quarter. Buying anywhere near reversal zone, extremely bad idea. So ask yourself a question if you're ready for volatility that's playing out currently in the markets. If you know what separates correction from reversal, that remains the key. Only rule-based trading will tell you that. And that's the reason why I'm excited about the Fibonacci Bootcamp. Trading room is closed as of Thursday, as we're going into complete lockdown with my amazing students. If you're interested to join us, one spot left. And because we're dealing with extremely peculiar case, we may have extra spot left, as we know. We only would like very peaceful and very fun environment. We're not gonna go into that. So on that note, let's buckle up. As I spelled out to you, expect buyers on S&P, expect buyers on oil, where we're overextended bearish pressure, and buyers are stepping in on S&P again.